Today, we're diving deep into the financials of one of the most well-known companies in the tobacco industry, Altria Group, the tobacco company who wants people to stop using tobacco. What? In the next minutes, we'll go through some of the fundamentals and financial information about Altria Group to help you make better investment decisions. Let's break it down. Altria Group, founded in 1822, is the largest cigarette producer in the United States. The company manufactures and sells cigarettes and smokeless tobacco products in the U.S. Altria is widely known for its flagship brand, Marlboro, which remains one of the most recognized and trusted names in the cigarette market. Altria's business is primarily split into two segments: smokable products, which account for 88% of its revenue, and oral tobacco products, which make up the remaining 12%. What's particularly interesting about Altria is its commitment to transitioning adult smokers to a smoke-free future, even though its core business is rooted in tobacco. Altria Group's competitive advantages are what allow the company to maintain its market dominance, even in a shrinking industry. First, there's their strong brand portfolio, led by Marlboro, which continues to hold a significant market share in the U.S. Next, Altria's market leadership gives them significant pricing power, which, combined with economies of scale, helps keep costs low and margins high. Finally, customer loyalty plays a crucial role in sustaining their revenue stream. The addictive nature of nicotine ensures a stable, recurring customer base, making Altria's business model resilient, even in challenging times. Now, let's dive into the long-term fundamentals, starting with the current ratio. As of the end of 2023, Altria's current ratio stands at 0.49, and it has oscillated between 0.2 and 1 over the last 10 years. Given Altria's consistent revenue stream, this shouldn't be something to be overly concerned about. Revenue has grown from $18 billion in 2014 to $20.5 billion in 2023, reflecting a compound annual growth rate of 1.3%. A modest growth rate, but not so bad given that cigarette volumes declined 6% per year in the last 6 years. Altria has managed to sustain and even slightly grow its top line, despite the not-so-effective attempt to diversify from cigarettes, at least until now. Moving on to operating income, the company currently boasts $12.2 billion, showing continuous growth over the years. This indicates strong operational efficiency and cost management. Net income is another important metric. Altria currently reports a net income of $8.13 billion, although the company experienced a negative year in 2019. Net profit margin is currently at 39.7%, which aligns closely with the net income pattern. Altria's ability to maintain such a high profit margin highlights their strong pricing power and cost control, although with a conflicting return on equity currently at very negative levels. Now, let's talk about Altria's leverage. The net debt-to-equity ratio has been growing, stabilizing at around 2 times equity over the last 5 years. While this indicates that the company is taking on more debt relative to its equity, it's worth noting that the net debt-to-operating income ratio has been falling, with a slight increase in 2023. One of Altria's standout features is its dividend yield. The company has a long history of paying and consistently growing its dividends. As of now, Altria offers an impressive 8.5% dividend yield, which is very attractive for income-focused investors. Finally, the company's valuation. The price-to-earnings ratio as of August 2024 is 9.2, which is on the lower end of its historical range. This suggests that the stock might be undervalued, especially if the company can maintain its current earnings and dividend payouts. By the time you watch this video, these numbers might be different than when I recorded it. This is why it's essential to understand Altria's historical levels so you can compare them with the current numbers. Altria's 1.3% CAGR in a shrinking market shows resilience, driven by pricing power and a slow transition into smoke-free products. However, sustaining long-term growth depends on the company's ability to transition smokers to smoke-free alternatives and explore new markets like cannabis. Altria Group presents a strong case for investors looking for stability and income through dividends. While the company operates in a declining industry, its competitive advantages, consistent financial performance, and attractive dividend yield make it a solid choice for those willing to accept the risks associated with tobacco stocks. Remember, investing in individual stocks always comes with risks, so it's important to do your own research and consult with a financial advisor before making any decisions. Thank you for watching. If you found this video helpful, don't forget to like this video and subscribe to our channel for more financial content. See you in the next video.